Okay, recording this video. For me it is Monday morning, 8th of June 2015. In Chicago it is 7:51 p.m. on Sunday evening, and I wanted to put out a video before really we kind of get going with this week's trade because we're at absolutely critical support levels. Hopefully not too long a video. Last weekend when I put a video out I said the 2100, 2102 support level was absolutely key. I thought we would get a break of it, but I thought we'd get a decent break into a real kind of strong trending move. And last week's activity, we played around with that 2100 level all week. We played up as high as 2120, but we kind of closed the week well down on it. Decent ranges, decent volumes kind of all week, but no kind of serious trending down move on the way down. But at the end of this week, now what have we found ourselves? We find ourselves with a triple, which is a break, in this case of support, on all three time frames. I'm using the daily, then zeroing down on the 135-minute chart, and then the 45-minute chart. There's a multiple of 3 between each of these time frames. So the triple is we've got support on all three time frames with these red kind of lines, dotted lines kind of printed, and we got a close below all three. Now that's an extremely weak pattern. Sometimes if you get a break of one time frame, say the 45-minute chart, it can get caught by a support level that comes in a little bit later on the next highest time frame. So if we'd had a support level print down here on Friday's or Monday's activity, that would be being caught. This downtrend move would be caught by support coming in on the next highest time frame. However, because that support level printed way back here, we don't have anything in the way to cyclically catch a move on the way down. So that's why a close below all three support levels is important. There's nothing to catch us on the way down, which means that it could generate kind of a bigger kind of trending move. Trending maybe on the 135-minute chart, maybe even on the daily chart. So we'll have to kind of wait and see. When I look around in terms of data this week, there's not a huge amount of data kind of coming out this week. When you look around the world in terms of where the capital is flowing and so on, it's not kind of clear that certainly the bond market is having a really tough time. But it sold off pretty hard. Maybe we'll have the bond market kind of catch this week because the money flows out of equities into bonds. I don't know. Crude is looking a little bit stronger again as another place to park your money. Out of equities and into crude. I don't know where those kind of major kind of flows might happen, but all I can see on this chart is this is damn weak. So I'm going to be looking at Monday's trade really closely. Let me just show you some other charts I'm looking at. When you zero down, I always say the 45-minute chart is not unlike the 40,500 tip bar chart, which is the highest time frame tip bar chart I look at. And you can see here we've had support print at 2100. We're closing below that. In the background, all that we have is a whole bunch of exhaustion and flush patterns kind of going on. So we had exhaustion patterns, bearish divergence comes in, we come back, another exhaustion buy up here, bearish divergence, flush. So we've done all of the hard work on the upside. All of that activity kind of into those new highs has just exhausted the buyers, and we have no exhaustion sell on the downside. So potentially breaking into a downtrend here on the 40,500 tip bar chart. Friday's activity on the different indices was kind of interesting. So there was a mix of the two. The two usually kind of conservative indices, so the Dow and the S&P closed very weak. So this is the Dow chart, and we closed below cyclical support on the Dow. When you look at the S&P 500, this is a blue professional bar closing below support here. However, the two kind of more leading indicators, the leading indices, which are the Russell and the Nasdaq, both closed really strong. They had kind of up days, whereas the other indices were down days. And usually that's kind of a leading indicator would be the Russell. So you can see there the Russell kind of closing up with a strong kind of day. And on the Nasdaq, not as strong as the Russell, but still kind of closing up. So that's kind of 50-50 and not too convincing. Normally when the indices start to diverge like that, you kind of go with the high beta indices, which would be the Russell and the Nasdaq, in order for them, because they tend to kind of lead the markets, and then the more conservative indices, the Dow and the S&P 500, kind of follow along. So that's not altogether in sync with a big sell-off. The other thing that was kind of interesting was this week's activity. We had a high volume churn bar. So this is a better volume on a weekly chart of the E-mini. Now we know that we kind of broke to new highs here. It was incredibly weak, just like, so these are kind of low average trade size amateur up bar type stuff that we had into these kind of highs here, and we had weakness after that. You know, the previous 2 weeks we had that same thing, very low average trade size, kind of weak buying amateur stuff at the highs, and then we had a high volume churn bar. High volume churn means relatively high volume but relatively compressed range. Now I really like high volume churn when we're breaking to new highs, kind of on the way up. It shows us that there are new sellers kind of coming in, just like we had here and here. As these bars are heading up to new highs, new sellers are coming in and compressing the range, and that extra volume is causing churn, and then we have a kind of, the market starts to falter. So like here, into this decline, this one into this decline here. Or the other side is at bottoms, so we have a decline, and then the buyers come in, compress the range here of this little high churn bar here. The volume is high, the buyers have come in and soaked up all of that selling volume by compressing the range. We have a high volume churn from which we have a bounce like that. But the instance that we have here is we've gone into kind of low volume kind of amateur up bar stuff into new highs, and then the high volume churns kind of come in. So I've looked back over this chart and said, well, where have we kind of come across that before? And we have to go back quite a long way. We have to go back to, whoops, I've kind of lost this. We have to go back to 2000, to the beginning actually of the tech wreck, which is kind of bizarre. But anyway, this is where we have a similar pattern, where we have a couple of amateur up bars into new highs. We had some weakness after that, and then a blue professional bar, high churn bar, kind of comes in here, and then we have a really big kind of sell-off the next week. We test back up and then sell off, and then whenever we came back into that kind of highs up there, you can see all this churning happening, and eventually that led to the tech wreck. So that's kind of an interesting historical kind of pattern when we're looking at the way this is kind of turning out. So kind of bear that in mind. And then lastly, commitment of traders crash warning indicator, and I get emails every once in a while over the last couple of months saying, hey, what about that crash warning indicator that we had kind of go off a few weeks ago? What do you think? And all I can say, well, it's out there. We had some failures in terms of these warnings. Haven't been an incredibly reliable indicator of these kind of corrections and crashes. The warning indicator has been really good. We had kind of 3 kind of duds in a row. We had a good one last year, and this one's kind of out there, and we've not really traveled very much past that. And what's interesting is my commitment of traders data that I flipped kind of upside down has been kind of negative the whole time. So that we didn't bounce these ones that didn't work out. We bounced back from negative readings into positive readings really quickly from all of these. But what we've had since this warning kind of indicator came up is we've just played negative the whole time. So it's out there. And it's kind of at some point we've got to get resolution kind of either way. So that's all I can do. I can just show you what I'm looking at on my charts. I have a pretty bearish kind of view normally, but this kind of triple close here would suggest that things are going to end up with some kind of pullback to end of trend. Let's wait and see. Maybe the plunge protection team or whatever will step in. Maybe there'll be a huge kind of rescue from all the central banks around the world that keep the US market up. But who knows? That's why we all love trading, because no one knows. Anyway, so I hope your trading is going well, and this is going to be a cracker of a week, so I'm looking forward to it.